I think that there's a lot going on in the markets, and the market's been under a lot of pressure. But still, as we saw, we want to see trading come out smooth, and that's what we saw today. Opened at 42, and it's stayed relatively in that range.
But we're quite a long way below the initial aims. We're quite a long way below where it opened today. Who do you blame that on? Were the bankers too greedy? Was the company too greedy?
I think if you take a step back and think about the size of this transaction, last night $8.1 billion was priced. We haven't seen an IPO of that size since Alibaba went to market in 2014. So I think that the market absorbed that interest pretty well. And then if you look at today, we traded $1.4 billion in that opening trade today.
And yet, most of these big blockbuster IPOs manage to raise a lot of money and usually have a pretty good day. I mean, it's fairly unusual to see a drop like this on an opening trade of a highly anticipated IPO that people think is totally disrupting the way we live.
Yeah, I think that the market is absorbing all the IPOs that have come to market pretty well. And I think if you look at the size of this IPO, I'm not surprised. The market was down over 300 points as it was opening this morning.
But it's rebounded.
Yeah, but I think there's a lot to absorb with the trade. And listen, today is one day in the life of this company. They're in it for the long haul. If you look back 10 years, nobody had an Uber app on their phone because Uber didn't exist. Now I can't even think of somebody I know that doesn't have an Uber app. They've built a platform with over 90 million users, and now we're going to get to see what over the next 5-10 years are they using that platform for.
Your predecessor, Tom Farley, was very clear earlier on CNBC that he felt the company should have gone public earlier, 1-2 years earlier, not just weeks earlier. Do you agree?
I think it's very easy to look in hindsight and say what are great market conditions overall. But you have to consider what's right for the company. And each individual company has their own conditions. When are they ready to go public? So I don't think it would be easy to say that it was the right time for Uber in particular.
So who's waiting in the wings watching this Uber action that you want to see go public?
There are a lot of dynamic companies out there, and you know who they are. You know, there are a lot of companies that have been getting ready. What's interesting is at the end of the year when volatility really picked up, we started to hear from some of those companies that had been waiting that they wanted to be ready to go public when they felt like the time was right for them. So we've seen some of them come to market. We had PagerDuty, Pinterest, Jumia, Levi's, Uber, and there are others that you know that are out there too.
Yeah, we have a few on the board. I mean, what are you going to tell them if they ask you what happened? Uber went down more than 7% in its first day?
I think you're describing that as a negative result for the company. They were able to price 8 billion shares last night, and their stock traded pretty smoothly today.
What's your take as to why Uber's down one day, fine, Lyft is down significantly over the last month? What is your take on why that has happened, if it is a bit of a guide to the others that are to come public and where they should price accordingly?
You know, today's modern companies look a little bit different than they did before, and the private markets have been valuing them, and the private markets do a good job. There are a lot of smart people in the private markets that are valuing stocks, but it's really the public markets that need to that best value securities, and it takes some time to determine what that looks like, and that's what we're seeing happen.